Hello, and thanks for stopping by the Investors Corner here at goldcodirect.com. I'm Trevor Gerst. Even gold needs a timeout. By the time the yellow metal takes in world economic news, it needs to take a breather on the way up. Improvements in the economy, more optimistic employment figures, and accelerated housing starts won't change the course for gold. That course has already been charted by the Fed with monetary easing. Still, big investors will sell off, traders will get stopped out of the market, and the dollar will continue its flight of fancy. The fearful buyer will withdraw to the sidelines, but the stealthy buyer will grab at the opportunity. Which one are you? Right now, gold is looking for a jump start now that monetary easing is becoming old news. In not too deep background, India is experiencing aggressive gold demand for its wedding season and for its Diwali, its festival of lights. Indian buyers never despair over the value of gold. They're strategic buyers motivated by a long tradition, but they do look for bargains. You should take your cue from them when gold takes a breather. And as we mentioned in previous columns, central banks continue to accumulate. We've only to turn to history to see a period of easy optimism only to be eclipsed by bad economic news. The Roaring '20s were taken by surprise by a tumbling stock market and the Great Depression, and the so-called go-go '60s, an explosive period for stocks, were all too quickly followed by an inflationary period here in the United States. It would be a big mistake to think that the effects of the 2008 bank failures and recessions are behind us. Remember, the figures that Ben Bernanke quoted. The Fed is prepared to pump $45 billion into the economy until the Fed Board of Governors decides that America is on a firmer financial footing. Meanwhile, you can buy gold at current prices or wait to hear from the Fed. Until next time, thanks for stopping by the Investors Corner here at goldcodirect.com.